Before we get to today's picks, I want to clarify something. I have noticed queries about why I've begun discussing stock fundamentals, news, and other non-technical details in these daily videos, despite this channel's focus on quantitative trading. Let me clarify, our algorithm for selecting daily oversold stocks established in 2019 remains unchanged. So why the new layer of commentary? The answer lies in a blend of curiosity and a deeper search for understanding. Over the years, I have always wondered about the stories behind the stocks picked by our algorithm. How do these selections, which we might only hold for 24 hours, fit into the broader market narrative? What can they tell us about market behaviors and trends? I have always seen each of our daily picks as a character. This exploration stems from a desire to delve deeper into the characters behind our daily picks. For years, I have been eager to understand the context around these daily picks, their dynamics at play, and the factors influencing these picks. It's about reverse engineering these picks through a conventional analysis lens. By exploring fundamentals and news, I aim to learn more about my daily picks and, in the process, video journal it. The goal is to satisfy my curiosity, offer a richer view of market dynamics, and who knows, potentially uncover insights and patterns that could inform new strategies when we do a retrospective at some point. And by sharing it with my followers, I aim to foster a community of learning and exploration. I hope this reassures you that our commitment to our quantitative foundation is unwavering. Today's pick number 1 is SRTY, ProShares Ultra Pro Short Russell 2000. SRTY is designed to provide 3x inverse exposure to the daily performance of the Russell 2000 index. This means that if the Russell 2000 index goes up by 1% in a day, SRTY aims to go down by approximately 3% and vice versa. But before examining the reasons why SRTY appear to be oversold, let's start with the basics to ensure we're all on the same page. The Russell indexes, created in 1984, help investors understand how different parts of the US stock market are performing. Among them, the Russell 2000 stands out because it tracks small companies, typically valued between $300 million and $2 billion. These small companies are important to watch because they can grow quickly and are a good indicator of the domestic economy's health. So, why is SRTY oversold? A significant reason is the Russell 2000's strong performance, particularly in the financials, industrials, and information technology sectors. The financial sector has benefited from rising interest rates, which can lead to higher profit margins for banks and financial institutions. Meanwhile, optimism about economic recovery has boosted both the industrials and information technology sectors. As these sectors within the Russell 2000 thrive, SRTY, which inversely tracks the index, tends to lose value, leading to its oversold status. Today's pick number 2 is CLVT. Clarivate PLC is a global leader in providing trusted insights and analytics to accelerate the pace of innovation in science and intellectual property. The significant overselling of CLVT can be attributed to a mix of its Q4 earnings outcomes and market reactions, despite a year-over-year revenue increase and an EPS that beat consensus estimates. While the company reported modest revenue growth in various segments, including intellectual property and subscription revenue, it missed Wall Street's revenue estimates in key areas like life sciences and healthcare and academia and government. Furthermore, the forward-looking guidance provided by the company, indicating soft transactional revenue and a slight divestiture in the IP segment, might have contributed to investor concerns about future growth. Additionally, social media sentiment has been extremely bullish based on message volume and sentiment scores, suggesting a disconnect between investor sentiment and the company's actual performance and outlook. This discrepancy, along with the broader market's reaction to the mixed financial results and cautious forward guidance, likely led to the stock being oversold. Today's pick number 3 is TTWO. Take-Two Interactive Software Inc. develops and publishes video games. Take-Two Interactive Software Inc. appears to be in an oversold position due to a combination of recent financial results and market reactions. The company reported mixed fiscal Q3 2024 results, with a slight dip in net bookings and an improvement in GAAP net loss, which could contribute to market perceptions of the stock being undervalued. Despite strong performances from flagship titles and in-app purchases led by Zynga's Toon Blast, challenges such as softer mobile advertising and sales for NBA 2K24 have led to a revised fiscal outlook for 2024. Additionally, the anticipation of new releases and ongoing investments in franchises like Grand Theft Auto and NBA 2K, alongside strategic cost reductions, highlight the company's efforts to balance growth and efficiency. However, the stock's recent movements, including a significant range between its 52-week high and low, alongside a detailed earnings report that adjusted future projections, suggest that investors may currently undervalue TTWO's long-term potential and strategic positioning. Today's pick number 4 is NVDQ. Nvidia's stock has shown a bullish trend, likely driven by strong quarterly earnings, positive forecasts in growth sectors like gaming and data centers, and technological advancements in AI and deep learning, which bolster investor confidence. Consequently, NVDQ, designed to provide two-pace the daily performance of Nvidia's stock, appears oversold as investors move away from bearish positions on Nvidia. The bullish sentiment surrounding Nvidia undermines the value of inverse ETFs like NVDQ, leading to its price drop and the oversold condition, which is further amplified by the leveraged nature of the fund that magnifies daily performance shifts. Today's pick number 5 is EGO. Eldorado Gold is a gold and base metals producer. Eldorado Gold Corporation stock may be considered oversold due to several converging factors. The stock has witnessed an 18.4% drop from the beginning of 2024, potentially leading to a market perception of undervaluation. Despite beating earnings expectations, the market might not have fully digested this positive development. Wall Street analysts are predominantly advising to hold the stock, with an average price target indicating a significant upside. Additionally, the company flagged higher costs at its Skouries project, which could lead to concerns over future profitability and contribute to the selling pressure. Moreover, technical analysis patterns have suggested bearish sentiment and mixed social media sentiments could be amplifying this view, all of which could contribute to the stock being deemed oversold in the market.